Hi traders, you're welcome back to the Forex Geek channel. Have you ever wondered how professional traders predict pullbacks and extensions in the market with such precision? Now, the secret lies in Fibonacci retracement and extension levels. Okay, these tools help identify key areas where price is likely to reverse or extend, giving traders an edge in both entry and exit strategies. Now, in this video, I'm just going to be breaking down exactly how to trade using Fibonacci retracement and extension levels step by step. Okay, by the end of this video, you're going to know how to apply these powerful tools to your own charts and take your trading to the next level. Now, we're just going to be diving in real quick. First of all, let us start with the basics. Okay, Fibonacci retracement and extension levels are based on the Fibonacci sequence. All right. Now, the Fibonacci sequence in itself is a mathematical pattern that appears throughout nature and financial markets. Fibonacci retracement levels are used to find potential pullback zones where price may reverse before continuing in the original trend. Okay, before continuing in the original trend. So these are Fibonacci retracement levels. All right. Now, the most commonly used retracement levels are the 23.6%, which is a shallow pullback, usually in strong trends, the 38.2%, which is a moderate retracement, often a key reaction zone, the 50%, which is a psychological level often tested in price action, the 61.8%, which is the golden ratio, one of the most powerful support or resistance levels, and finally the 78.6%, which is a deep retracement, often seen before a major trend continuation. All right. Then, as for the Fibonacci extension levels, I'm going to add the Fibonacci extension right now. Okay. The Fibonacci extension helps traders to predict where price might move next. All right. That's for the Fibonacci expansion. It helps to predict where price might move next after breaking through key levels. Okay. Now, the main extension levels are the 100 and the main extension levels are the 127.2%, which is a minor extension, often a short-term target, and then secondly the 161.8%, which is the golden extension, a strong resistance or support level, and finally 261.8%. I'm just going to add that you can actually add an extension level. You can actually add an extension level that is not yet added, or rather that is not in the default. Okay, so we're just going to add 2.618. Okay, which is FE 261.8, and we're also going to add the 42 point. We're going to add the 4.236, which is going to be the FE 423.6%. Okay. So now, having added these two levels, we can see these are also important price points. Like when you're talking about long trends, right? The 261.8% and 423.6% are used for identifying long-term targets in strong trends. So those don't have to deal with strong trends. Okay. Now that you know what Fibonacci retracements and extensions are, let's just go over how to properly draw them on your chart. Okay, let's go to how to properly draw them on your chart. Now, for Fibonacci retracement, identify a clear trend. All right, So just like we can see right here on this chart, identify a clear trend, okay, either an uptrend or a downtrend. Then in an uptrend, place the Fibonacci tool from the swing low, right, to the swing high. Can you see that? On the other hand, if it's a downtrend, let's just see if we can find a good downtrend real quick. Okay, if it's a downtrend, you're going to place it from the swing high to the swing low. All right? The swing high to the swing low. Then you watch for price to pull back to one of the key Fibonacci levels before resuming the trend. As you can see what happened. It pulled back. In this case, it pulled back between the 28.6 to 8.2% before resuming the trend. In this case, we can see that it pulled back from here to here. It pulled back to between the 38.2% to 50% before resuming the trend. Then as for your Fibonacci extension, you have to identify a strong price movement, also known as an impulse wave. All right. Then you place, now this is an impulse wave. This is the impulse wave we're going to be using, right? This is the impulse wave, this particular move. All right. You have to identify a strong price movement known as an impulse wave. Then what you have to do next is to place the Fibonacci tool, the expansion tool, from the start of the impulse wave, right? From the start of the impulse wave to the end of the impulse wave. Can you see that? From the start of the impulse wave to the end of the impulse wave. So once you have done that, okay, so after doing that, you just drag it back. Okay, I'm just going to remove the retracement right now, since we don't need, we're talking about the expansion at the moment. So let me just remove the Fibonacci retracement. Okay, so once you have done that, you have to now drag it to, all right, drag it to the retracement. Can you see that? Remember that it started from the beginning of the impulse and ended at the end of the impulse, and then you have to drag, can you see this? You drag it to the retracement, back to the retracement point, to project future price targets. So having done that, use the 161.8% and 261.8% levels as potential profit targets or key resistance areas. Now, Fibonacci levels are not magic lines, okay? They work best when combined with other technical tools. So here's how to use them effectively. Wait for a confluence. All right, it's important. The strongest Fibonacci levels align with support and resistance zones, trend lines, or candlestick patterns. So it's important to wait for confluence, and then look for reversal candlestick patterns. Okay, so I'm just going to draw this Fibonacci retracement again. Now it's important to also look for candlestick patterns. All right, if you can find any bullish candlestick pattern within a buy trend, that's a good one. If you can find bearish candlestick patterns within the sell trend, that's a good one. Okay, then use Fibonacci extensions for take profit targets. Your extensions are for your take profit targets. All right. If prices retraces to a key Fibonacci level and resumes its trend, use the 161.8% or 261.8% extension levels as potential targets. Now, before you start using Fibonacci in your trading, here are some common mistakes you need to avoid. The first is forcing Fibonacci on the chart. If the market does not respect the levels, they are not valid. All right. Secondly, do not ignore market structure. Always consider higher time frames to confirm key Fibonacci levels. And finally, do not trade Fibonacci levels alone. Okay. Combine Fibonacci with price action, trend lines, and support and resistance for better accuracy. And finally, always wait for confirmation. Price might touch a Fibonacci level and keep moving. Wait for candlestick confirmation before entering the trade. All right. For example, you can see here at this point, you will notice that we actually had, the price got to the 38.2%. It kept on going down. Now, it didn't reach the 50%, but if you're just jumped in to enter at 8.2%, what if it had gone further downwards? But after the price got rejected and formed this bullish candle, then you could have entered a buy trade, because at that point, it shows that it was rejected around the 38.2% level. So always wait for your confirmation, basically, before entering your trade. Now, let's just do a quick recap. Fibonacci retracement levels help identify potential pullback zones before a trend resumes. Then your Fibonacci extension levels help project future price targets in strong trends. Okay? Always draw Fibonacci levels from swing low to swing high. All right? From swing low to swing high. Or vice versa. All right? If it is for a buy trade, from swing low to swing high. If it is for a sell trade, from swing high to swing low. Okay? Then always look for confluence with support, resistance, and candlestick patterns for higher accuracy. Avoid forcing Fibonacci on the chart. If it doesn't align with your price action, do not use it. Okay? So if you found this video helpful, make sure to smash that like button and subscribe for more trading strategies. Also, drop a comment below. What is your favorite Fibonacci level to trade with? Let us talk trading in the comments. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.